Sanjeev Prasad, Managing Director and Co-Head with Kotak Institutional Equity joins us now. Sanjeev, fantastic to have you back and thank you for joining us. Sanjeev, it's been quite a satisfactory August, so to speak, for Indian markets. A month ago or 6 weeks ago, markets were worried about trade war. They were worried about crude. They were worried about, in general, rich valuations. But given where we were versus where we are right now, it's been quite a makeover. It's been quite a mood change.
Well, I guess so. Of course, you still have all the macro issues which are out there. I guess the market is willing to overlook some of these issues. So it looks like we have a situation of a frog, in a pan of boiling water. The water is boiling, but the frog probably doesn't feel that the water is, getting hotter. So we'll see how it goes from here.
Do you think we cannot ignore, when you say frog in the boiling water, are you referring to what's happening in Turkey? Are you referring to what is happening to other emerging markets? What are you trying to imply?
No, lots of things. Even if you look at the global macroeconomic situation, it is not very good. On the one side, you have this whole US-China issue on trade, escalating by the day. And if US actually goes ahead and imposes tariffs on the next $200 billion of imports from China, I mean, that is definitely going to destabilize Chinese economy to some extent. Already you are seeing some macro, challenges over there. Then you have the second issue of oil, and as you know, the US sanctions against Iran, as far as oil specifically goes into play from November 5th. And given the fact that Iran is such a huge exporter of oil, about 2.2 million barrels per day, compared to total global demand of somewhere about 99 million barrels per day. If even half of that goes out, then we have a real challenge as far as global supply situation is concerned. There is no way, other countries will be able to increase production so quickly. So the chances of oil prices going up higher still on the higher side. So it's not as if the macro environment has become any better over the last 3-4 weeks. If anything, it has probably deteriorated from where we were about 3-4 weeks back.
Are you scaling up on IT and pharma primarily because of what's happening with the currency? Because in a defined manner, you would have, at least for the near and foreseeable future, the currency trading weaker rather than stronger.
See, again, you have to look at, every stock, not just based on some program trade in the sense, macro is weak, you go and buy IT and pharma. You have to look at everything on a bottom-up basis and see whether the price value equation ultimately makes sense or not. And it holds across, every sector, every stock. So I'm not in this game of, I'm running a program effectively which says, okay, macro is bad, just go and buy some IT pharma, macro is good, buy corporate banks or metal mining, those kind of stocks.
What else do you do as an investor in the market when you know things are beginning to get wobbly? We don't know the extent of where this Turkey problem is going to lead to, but we can already feel the heat, at least when it comes to emerging market currencies, and we also are getting swiped in that same wave. As an investor, I mean, do you stick by with that quality paper, the HDFC banks, Kotak banks, what have you of the world, or do you now look at some of the contrarian pockets, for instance? Do you bet on cyclicals or not? There are quite a bit of quandaries in your mind right now.
See, that has been the trade anyway for the last 8-12 months. It's only the growth in quality stocks which have been performing. If you look at the year-to-date performance of the Nifty, the entire performance has come from, probably 10 stocks. The names which you took, Reliance, HDFC Bank, HDFC, Hindustan Lever, Kotak Mahindra Bank, IndusInd, the standard quality growth names are the ones which are performing. So yeah, in a way, you continue with that trade. If you have macro issues, probably people continue to hide in the high quality growth stocks or in the IT names, and that's been the trade for the last 7-8 months. If you look at on a year-to-date basis, one of the reasons why the Nifty has actually performed so well is also the fact that the rupee has depreciated significantly, which has resulted in the IT sector actually being a big driver of the whole performance in the market. If you look at, let's say, the Nifty 50 index performance over the last, let's say, half months on a calendar year to date basis, it's up about roughly 8% on in rupee terms. But in dollar terms, it's actually pretty much flat, given the fact that the rupee has depreciated that much. So it's not as if this market is doing very well. And if you actually extend it beyond the top, let's say 20, 30 names, then the market is actually performing pretty horribly. If you look at the BSE mid-cap index, it's actually down somewhere about 9% and probably down 15-16% in dollar terms. If you look at the BSE small cap index, it's actually down about 12-13% in rupee terms, probably down 20% in dollar terms. So it's not as if, this market is made a lot of money for investors.
But Sanjeev, is it time then to bet on the underperformers? I mean, if, for instance, BOB or SBI, or for that matter, even ICICI Bank's numbers are, anything to go by, it seems that we're nearing the end of that NPA crisis. Is it time that some of these PSBs, some of these corporate banks could be in for a re-rating? Maybe not now, maybe 2-3 quarters down the line?
Well, I would agree with that. Our view is that the NPL cycle, at least the large corporate loan book NPL, that is largely over. At least its peak, we are starting to see some more resolutions moving ahead. Provisions have reached a reasonable level, which makes us somewhat comfortable that the loan loss provision numbers incrementally should start declining. And if that is the case, then next 2-3 quarters, you should start seeing the financials as far as the P&L are concerned in terms of ROA, ROE also starting to move in the right direction. And that's when you could actually see some of the stocks getting rated. You've already seen the performance in the last 1 month. Some of the corporate banks have given actually pretty handsome returns. So yes, there is value out there. Of course, if you have a situation where the macro deteriorates significantly from where we are, hopefully not, I don't know about the Saudi Iran-US situation, how it pans out, but that's a big risk out there. So if the oil prices go up higher, then probably the stock may not perform. But I think over the next 3-4 quarters, if you have a slightly longer term view, then there is clearly value out here.
Have to ask you on Reliance. The promise of Reliance moving from an old economy company to a telecom company and now perhaps towards big data and artificial intelligence. Is that the reason why the stock has seen a linear move after the AGM? And do you think that should one believe the proposition Mr. Mani tabled on the AGM?
Well, I would put it this way, it certainly has ingredients. If you look at the company, it has about roughly $4 billion of free cash flow generation from the petrochemical refining business every year. So that can support a lot of, investment in the new areas. It has already got about 20 million subscribers, which will probably go to about 400 million in 2-3 years' time, as far as telecom subscribers are concerned. It also has got a fair amount of media content company that's also got the back-end supply chain as far as the whole organized retailing business is concerned. Now, can the company put everything together? Possibly, given the fact that it does have great execution capabilities. So you combine the cash flows which the traditional businesses are throwing with the dumb pipelines which are already there to 200 to 400 million subscribers over a period of time. And some amount of logistics back-end supply chain is already available. So in a way, you have a company which can be the equivalent of, some sort of a technology platform company, doing e-commerce and also offering entertainment. If I can use the term, maybe it's a combination of Amazon plus Netflix going forward. And the question is, how much do you want to pay for that kind of, model in 2 to 5 years time frame? Should you pay everything today, or you wait and see how the execution plays out?
So, Sanjeev, between ICICI Bank and Reliance, which is a better one to buy? They both have a different kind of proposition. One has a promise of cyclical turn, other one has a promise of free cash flow generation and this option value which will come from its IT/tech business.
See, the way I would look at it is you would probably make money both in a 3 to 5 year time frame. That's what I'm interested in ultimately. I look at stocks on a slightly longer term time frame. Over the next 1 year, it is possible that you will make more money in ICICI Bank, assuming this whole NPL issue is largely behind it, and hopefully that's the case. Reliance, to some extent, is already discounting some of the option value out there. If I do a conventional sum of the parts valuation of the company, then it's hard to get to beyond 1,000, 1,050 based on just a pure bottom sum of the part basis. So in a way, the market is already giving, let's say, about 150 rupees, which is almost 1 lakh crore of valuation for some of the optionality which is out there. So maybe in a shorter term time frame, ICICI could be a better bet compared to Reliance, but as I said, longer term, I'm prepared to hold both the names.
Find value in OMCs, given what's happened with oil prices, and if in the foreseeable future oil prices remain in a range where 80 becomes a ceiling, are you in the camp that there's value in OMCs because they've fallen so much over the last 3 months?
Well, there is value surely, but I just don't know, what call should I take on oil, given this whole overhang of Iran-US issue, and what kind of sanctions come into play on Iran, specifically as far as the oil industry is concerned. Very hard to take a call on that. If it is very hard sanctions in the form of absolutely no exports, in a sense, any country which imports oil from Iran also faces some form of sanction from US. Any financial institution which is doing business with Iran faces sanctions, then it is a very terrible situation as far as global oil prices are concerned. Oil prices are going to shoot up dramatically in that case. So if that is the scenario, then I'm not a buyer of oil companies. I would rather wait and see how this whole sanction issue plays out. If it is a mild form of sanctions that, let's say, 500,000 barrels per day gets affected, that can be made up by other countries like Saudi Arabia, etc. But anything beyond that, let's say 1 million barrels per day or beyond that, becomes very hard for the other OPEC countries to balance.
We leave it at that. Thanks very much for joining us with your thoughts on the markets and sharing with us your insights. Really appreciate your time this morning.